Hey folks, Simon here with your Tao Daily for market close as of Wednesday the 30th of April 2025. Now, Wednesday was a volatile session. We had the GDP report that came out before market that showed a contraction of GDP minus 0.3% for the quarter. And that set markets off to a pretty sour tone. In fact, the S&P was down, S&P and NASDAQ were both down 2% at their lows shortly after the open. And then things turned around, popped, had a decent rally, and then ripped higher into the close. Most of that negative GDP came from a big surge in imports, which was probably or almost certainly attributable to people stockpiling ahead of the tariffs. So whilst nobody likes to see a negative GDP print, given the circumstances, I think people were prepared to look through it. And then this rip higher in the last 15 minutes, probably short covering ahead of mega cap tech earnings. Now, if we have a look at mega cap tech earnings, we had Microsoft out after market. They reported a 2% revenue beat, and that sent the stock up about $27 after market. So within the expected move. The expected move was $31, but still pretty good response there. And then Meta also reported better earnings than expected. In fact, they beat adjusted EPS by 23%. Revenue was a 2% beat, and that saw the stock rally, what's that, about $29. Now, that's the expected move, which was $48. But still a nice positive earnings result for the two mega cap tech stocks. You can see now S&P futures are up slightly under 1%. NASDAQ futures are up about 1.3%, largely on the back of those two stocks. So where does that leave us? Well, let's come back to this chart of the S&P 500 futures. And what you'll notice is we've got two consecutive closes above this median line, which I've been talking about for a couple of weeks. And what I've been sharing with you is if so long as price stays below this median line, this cyan aqua-colored line in the middle, we've got to treat this as a sell the rip kind of a market. But we could be looking at a change of character here. You can see we've also just closed above the 50-day SMA, and we are also just running into this 61.8% retracement level. All right, so if we can take that out, all of a sudden, new highs become a possibility. I'm not saying we make new highs, but I'm saying if we get two consecutive closes above the 61.8% level, and if we clear the 200 SMA as well, which is looming just above, open-minded to the possibility of a challenge of the old high and maybe even making new highs. So despite the negativity, despite the skepticism, despite all of the Trump tariff trade war chaos, the market at the moment is kind of shaping itself up into a more bullish character. That's what I got for you. I hope it helps, and I'll catch you tomorrow.